Welcome back to Success with Steven. My name is Steven Smith. On this channel, we talk about all things financial literacy. And today we're going to be talking about something that I've really wanted to discuss for a very long time. I spend more time with investing as far as stocks and things like this, cryptocurrency, than anything else. It actually surprises me that I've gone this long without actually talking about this stuff. Because even when you make a lot of money in your business, you need to find a way to grow your money. And besides stock investing in cryptocurrency and trading cryptocurrency is something that I've done for several years and that I continue to do today. So I want to talk about how you can get rich in cryptocurrency, doing this with a strategy of investing and doing this without luck. Now, the strategy, of course, I trade, and trading, you can make money fairly quickly. I've traded a lot of altcoins. That comes with a lot of risk. But today I'm not talking about trading. I am talking about long-term investing when it comes to cryptocurrency. And this will, again, always be long-term investing, making sure that you're making strategic choices that make sense and that you're not taking on too much risk. So while you can get rich, I believe, using this method without luck, it's not going to happen overnight. This is not a get rich quick scheme. This is logical investments for the future, and cryptocurrency would only be a diversification of your portfolio. It would be one aspect of your portfolio, not 100%. I think the most intimidating thing about Bitcoin and cryptocurrency is the price. When you see a single price of Bitcoin, even right now, it's around $58,000. And again, while that can be intimidating, you can invest in crypto with as little as a few dollars. And I just want to show you how you can invest a small allocation strategically to make massive returns. And in this video, I'll be giving you that information. But on top of that, I want to make sure that you know exactly what cryptocurrency is, how you would do this, and the reason why you should get started as soon as possible. And if this is going to be your first time learning about cryptocurrency or investing in Bitcoin, please leave a comment. I'd like to know what made you interested in this and how much you plan to invest going forward. So without further ado, let's get started. I've never asked you guys to stop or focus or pay attention to anything in any of my videos, but this is the one time I will ask. If you've clicked on this video, thank you very much. I truly appreciate it. I believe this is very important, and this is going to be the most significant part of this video. And I think it's very important for you to actually watch this all the way through. So I'm going to section this, and in the section, it's going to be, what is cryptocurrency, or maybe why you should purchase Bitcoin. Please watch this entire section. I would truly appreciate that because, again, it's very important. So first thing, let's talk about what is crypto. Cryptocurrency is a digital currency designed to work as a medium of exchange through a computer network that is not reliant on any central authority, such as the government or bank, to uphold or maintain it. And I'm going to give you a lot more detail when it comes to that, but that's just the textbook definition of crypto. Now, what is Bitcoin? Bitcoin was created in 2009 by an anonymous individual or group using the pseudonym Satoshi Nakamoto. Bitcoin is a form of digital currency that operates independently of a central bank, and it utilizes blockchain technology, a distributed ledger that records all transactions across a network of computers, ensuring transparency and security. Unlike traditional currencies, Bitcoin's supply is finite. It only will have 21 million coins, and that is it. That's all that will ever exist. This scarcity is one of the factors that contribute to its value. Now, this probably sounds like a lot of nonsense for you, because for me personally, it did too when I first started learning about crypto. But I want to break this down to make it as simple as possible. And hopefully by the end of this explanation, you'll understand exactly why this is so important. And then I'll explain why it is important for you to understand the significance of this currency. So the first thing I want to talk to you about is the 5 properties of money. Some of you may know this, some of you may not. But there are 5 properties of money that is required for something to be a currency. And the first property is durability. It must be strong enough to last through reasonable use. The second one is portability. Money must be able to move across space easily. The third one is divisibility. The standard unit of money must be able to break down into smaller units to accommodate small and large purchases. The fourth property is scarcity. Currency should be scarce. The amount of currency you hold represents your purchasing power. The more currency you have, the more you are likely to be able to purchase. But this is a relative game though. The amount of things that can be bought is final and equal in total wealth in the economy. So that's the problem that we have with our economy right now, but I'll definitely get into that. All the currency in the economy could usually purchase 5% of the wealth in the economy. So if you have a certain amount of currency, you don't want your neighbor to just find, produce, or counterfeit currency, because if he does, he would be able to purchase all the wealth and your purchasing power would diminish significantly. We're going to talk about a couple of different currencies. Gold, for example. Gold is a commodity currency. Indeed, it is scarce, it's hard to find, it's hard to produce, and seems to be the final amount on Earth, very hard to counterfeit. So the reason why we used gold for a while for a currency was because it was scarce, it was hard to find, and it was hard to produce, and it seemed to be a certain amount that you could get on the earth. That was the reason why we used it. We used to also have the US dollar on the gold standard. That gold standard is what allowed us to actually give value to fiat currency. Currently, in today's world, we use a lot of digital fiat currency. It's not scarce at all. It's produced by the government, the central banking system, and it can be counterfeited by them, and they can actually make an infinite amount of money at any time. That is the root of hyperinflation. Now, this is why I say all of this to tell you the property of money, because I want you to understand that Bitcoin solves a huge issue. Remember how I said whenever I talk about business, if you have a business, you have to solve a problem. This is the problem that Bitcoin solves. Bitcoin is a decentralized digital currency that is rare. It will only ever have 21 million Bitcoins in existence. That makes it very scarce. What's also important is if a bank is decentralized, it means that it's not controlled by the government. Centralized banking allows the government to actually manipulate money, move it to wherever they see fit without you having any knowledge of how much is produced, where it's allocated, where it goes. Bitcoin is an open ledger, which means everyone in the world has access to the same ledger. This would be if you can see the amount of money every bank had and where it goes. None of us have that information. Bitcoin would now put that information in your hands. So now I want to pose a question to you. Please tell me the inherent value of a $100 bill, a little green piece of paper with ink on it. All right. Really think about this. Look this up and make sure that I'm not telling you anything that's false. 90% or more of the US dollar exists only in digital form. That's in bank computers. 90% of the US dollar. Look it up and tell me that I'm wrong. Now explain to me the inherent value in those digital bits. What is the value? The truth is, the whole point of money is to use something with little or no intrinsic value as general purpose. The general public has an IOU. That's all that a $100 bill is. It's a paper IOU so that we could do commerce with strangers and not have to resort to bartering. We don't have to resort to trying to bargain in order to exchange this. The problem Bitcoin solves is called fiat currency and inflation caused by money printing. Bitcoin allows unbanked people like you and me, or people in developing countries, to be their own bank and to store up wealth which cannot be debased nor confiscated by the government. Bitcoin allows you to send money to anybody at any time, any amount from any country to country. There's a reason why a couple years ago you saw every financial institution telling you that Bitcoin was a scam while they slowly acquired Bitcoin. They tried to devalue it and then they tried to acquire it. The point I'm trying to make is, if you understand all the problems that we have in our financial system today, as far as inflation, as far as, money being sent around to places that it should not go, the hyperinflation, the centralization of the banking system, the dollar being taken off of the gold standard and basically being worthless. And the more I learn about money, if I'm being honest with you, the sadder it makes me, because I start to realize how worthless it actually is. And while, yes, you can go into a store and you can buy something for that, and the way that everyone perceives something, if we all perceive the same thing to be true, then it's true. But it's only true to a certain extent. There is a degree where if we were to continue on the path that we're going, you would see a collapse. Bitcoin solves that issue. There is a big issue at hand that this little digital currency can solve, and that is the value of Bitcoin. Bitcoin, because it is new, it's speculative. It's a speculative investment which offers the potential for a high return and a good portfolio diversification, but the risk associated with it is very, very high. It's volatile, and it needs to have more regulation. I don't believe that there's any security issues, but there can be some security issues that may not be appropriate for many investors. Now, these issues don't have anything to do with the blockchain or have anything to do with Bitcoin itself. In my opinion, it has to do with financial institutions who try to manipulate the price and manipulate Bitcoin for their own devices. Now, that is where, to me, the security issue lies. With all that being said, hopefully that gives you a better idea of why this is valuable. And now I want to tell you why it's so important for you to understand the value of this. Whenever I speak with someone when talking about Bitcoin, I ask them why they invest in it. I want to know the reason why you know this is valuable. Most of the time, they can't tell me why. They're just investing in it because the price goes up. That's a problem. You know why? Whenever you invest in something that you don't believe in or you don't understand, guess what you do when the price goes down? You sell it. I'm going to give you an example. If you have an iPhone and I tell you, well, the iPhone 16 is coming out, sell your iPhone 15 Pro Max to me for $100. Would you sell it to me for $100? Probably not, right? Why? Because you would know without a doubt, even if the whole world told you it's only worth $100, you would know, no, that phone is at least worth $500, $600, $700, $800. It's just one model older. The reason I use that example is not because it's parallel to Bitcoin in any way. The reason I use the example is because when you believe that something is valuable, no one can sway you to think otherwise. And what people don't understand about price action is things like this happen all the time. Use your house, for example. The price of homes go up and down all the time. I never see anybody go out and sell their house. Why? Because you know that the price will fluctuate. You're never just going to go out and sell your home. So the same way you believe in that, or you believe in the price of your phone, or anything that you deem valuable because you understand the significance of that thing, you need to understand this like you understand that. Once you're able to do that, you're going to be good because you will not be swayed to sell just because of price fluctuations. Now, there's so many things I want to cover in this video. This is the first video where we're discussing cryptocurrency and Bitcoin, but unfortunately, there's so many things I want to talk about, but I will not be able to cover. We will get into more detail as time goes on, and I'll make more detailed videos about specific things. One being altcoins, and other coins besides the two that we're going to talk about for today, and then eventually going into what's a cold storage wallet, centralized exchange versus your actual cold storage. There's a couple different things I want to go over, and then I want to go over the different exchanges as well, but we will not be able to cover all of that today. So I'm just trying to get through the basics. The one thing I want you to understand is why this is important, what you should invest in, and then we're going to go over a little bit about the exchange, the one that I recommend, and then our strategy. What should you invest in? I have some altcoins that I still hold to this day, but you need to pick whatever you do research on. So I'm going to talk about Bitcoin and Ethereum, but I'm sure some of you who know something about crypto, you probably are interested in some of the altcoins like Cardano or Solana or AVAX or XRP. You probably know a couple of these. It would take me so long to go over each and every one of those and to talk about the different projects. But here's what I will say. Do your research. Make sure that whichever one that you're investing in, that you look at the founder, look at their project. If someone can't explain to you what their project is doing If someone can't explain it in simple terms, they may be trying to sound smart without actually knowing anything about what they're talking about, and their project may fail. So I've seen that a few times with a couple of altcoins. Just because you don't have to explain to me how an engine makes a car run to let me know the significance of what a car can do. It gets me from point A to point B in this amount of time. It doesn't take, you can explain that simply. You should be able to explain something in simple terms to me to tell me what it does without it being overly complicated. And I'm only bringing that up because I've watched a lot of interviews with people who had projects for altcoins that ultimately failed. Now, if you are trying to 100x your money doing a trade with altcoins like Dogecoin and Shiba or whatever that other coin was, you can do that. That's perfectly fine. That to me is more of a trade or closer to a gamble than strategic investments, but that's not what we're going to talk about. What I think that you should invest in, this is my recommendation, is Bitcoin and Ethereum. Bitcoin is like the SPY of cryptos. If you know what the SPY is, parallel to the stock market, think of Bitcoin like that. Its value is greater than any other coin because it represents something greater than itself. And again, I just told you all the reasons why it's great. No need to beat a dead horse. While both Bitcoin and Ethereum operate on blockchain technology with a focus on decentralization, they aim to serve completely different purposes. Bitcoin is primarily a store of value, while Ethereum is functional, enabling the execution of applications and smart contracts. Again, we won't be able to go through all of that, but here's an easy way to describe it. If Bitcoin is digital gold, Ethereum is digital silver. So it's good to have both. If I had to recommend two cryptocurrencies to hold for the long term, these are the two I would recommend. Eventually, you should build a portfolio and diversify. Not only have Bitcoin and Ethereum, you also want to have some other alts. Maybe you want to hold them long term. Maybe you want to trade them. But again, there's so many separate projects. They need their own separate videos to discuss each and every one of them. Now, with that being said, Bitcoin and Ethereum have had a lot of value over the last few years. So I know some of you probably want to get the altcoins because some of them sometimes go 100x, 1000x. We've seen what happens when Bitcoin runs, what it does to those altcoins. You can make a lot of money in a very short amount of time. But again, we want to diversify and be smart for long-term success. So that's why I'm telling you to choose these two. I'm not saying they're the only ones, but for the sake of this video, we're talking about just these two for now. You want to buy them on crypto exchanges. A crypto exchange or digital currency exchange is a business that allows customers to trade cryptocurrencies or digital currencies for other assets such as conventional fiat money or other digital currencies. There's crypto exchanges and there's crypto wallets. A wallet is kind of like how you would think of like your actual wallet. You store your crypto inside of it. But crypto wallets give customers authority over their assets, and they give you private keys. There's public keys and there's private keys. With the public keys, you can actually see your crypto on an app. Your private keys provide a safe way to store your crypto. On the other hand, crypto exchanges offer a marketplace for buying, for selling, and trading your assets, but they also demand that consumers entrust their funds to them. The primary difference between a crypto exchange and a wallet, it lies in their function. Crypto exchanges, they facilitate buying, selling, and trading. Think about it like the stock market. You know, if you go on E-Trade or Fidelity, that particular place will facilitate the trade. Crypto exchanges do the same exact thing. In terms of security, crypto wallets generally offer higher levels of protection compared to exchanges. Since exchanges hold users' funds and private keys, they can be vulnerable to attack and theft. So just know that when it comes to exchanges, a centralized exchange, you can be subject to theft, you can be subject to hacks, but I've also seen a lot of them go bankrupt in the last few years, and then you can lose your funds. So just be careful. A rule of thumb for me, any long-term holds that I have, any investments, go into my wallet. Anything that I'm just trying to trade quickly, that will go on the exchange so I can do that as quickly as possible. Again, research is important because there's so much to all of this that it's hard to cover it all in a single video. It's impossible. I just can't do it. You want to make sure that you pick the best one. So that's what we're going to talk about next. I want to be able to at least lead you in the right direction. So the one that I would recommend is Binance. Binance is the world's leading cryptocurrency exchange. It caters to 169 million registered users in over 180 countries with low fees and over 350 cryptocurrencies to trade. Binance is the preferred exchange to trade Bitcoin, altcoins, and other virtual assets. They have spot trading, they have margin, and they have futures markets. You can buy and sell with Binance P2P. You can earn interest on your crypto with Binance Earn. That is one of the benefits of keeping it on a centralized exchange. When you keep it on there, it adds to their liquidity. So in turn, they sometimes will pay you for doing that with these Binance earnings and interest. You can buy or earn new tokens on Binance Launchpad. You can trade, stake, and loan NFTs on Binance NFT Marketplace. So there are a few benefits to doing it this way, but again, the most protection that you're going to get is going to be on your wallet. But I recommend that if you had to pick one of them, I would pick the largest one. Reason being, they have the largest amount of liquidity. What I mean by that is they have the most money. So chances are, if you had to sell all of your crypto in a hurry, more than likely you would be able to sell it with this particular exchange. So let's go over the investment strategy. This is an investment strategy that you should be familiar with if you've ever done any investing, but it's dollar cost averaging. So regular investments are the best way for you to have long-term success. You can invest a fixed amount at a regular interval, whether it be weekly, monthly, and you would do this regardless of the coin's price. This strategy, it reduces the impact of volatility, and you also avoid the risk of buying it at a high price. The next thing you need to do is be consistent, stick to your investment schedule, and you want to do that consistently for a long period of time. Another prime example of long-term dollar cost averaging is its use in 401k plans in which employees invest regularly regardless of the price of the investment. I think that is the best route that you could take, especially if you do have a 401k. They now have Bitcoin, spot Bitcoin ETFs that you can now invest in. So that is a way for you to indirectly invest while being matched by your employer, and you can get the most for doing that. So with a 401k plan, employees can choose the amount they wish to contribute, as well as those investments offered by the plan in which to invest. Then investments are made automatically every pay period. So that is my recommendation. Currently, if you're working a job, you should dollar cost average using your 401k plan, but you can also do it outside of your 401k, making regular purchases to the crypto exchange. You can either set it up automatically to happen again on a weekly basis, or you can also set it up in your 401k. If you would like to do that, I recommend contacting your employer and seeing how you can do that, or contacting, it's more than likely Fidelity or Vanguard. And this is just a simple concept of what dollar cost averaging looks like over a period of time. So if you do a lump sum investment of $800 and you do that at $10, usually let's just say like this is in the course of a year. If you were to invest 800 at 10 and then it was to be worth $10 in 12 months, then you would have a zero return from a lump sum investment. This is why dollar cost averaging is such an effective strategy. So if you were to, let's say, invest $100 at 10, and then you invested $100 at 20, you would then invest $100 at 7, you would invest $100 at 15, and let's again, over the course of a year, you would then invest 100 at 5, 100 at 6, 100 at 6.5, and then 100 at 10 again. The average unit cost would end up being $8.16. You would actually have a 20% return. So in actuality, your investment of $800 would now be worth $960. So that just goes to show you how doing one lump sum can be the difference of you not having any return, and then showing you how after doing dollar cost averaging for a period of time, you can actually gain $160. Now, I do this every single week on a Tuesday for crypto and also for stocks. And I've been doing this for a very long time, and I see significant returns by doing this. If you do this with your 401k, or you also have a crypto exchange that you use, and you do this on a weekly basis, this is the best way for you to see significant returns, especially if you're looking at trading and doing this with altcoins. So this is the strategy that I would recommend that you use. Thank you guys so much for watching this video. Again, I wanted to do a little bit more, but I am going to break this up into parts. I just wanted to give you a simple overview of how you can start doing this. And again, the significance of cryptocurrency and Bitcoin as a whole. If this explanation was really good, if it was easy to understand, please drop a comment below letting me know that, this was pretty easy. And if you like it, I will be more than happy to create more content around this subject. Again, this is something that I do on a regular basis. I consistently invest into this. I consistently trade at lots of intervals, and for a source of income, this has actually been one of my main sources, and it's been very successful over the long term. So again, if you want more information on that or to see the long-term outcome of doing this, then I'll be more than happy to show you. And you guys have a wonderful day.